The stock market reached new heights, with the Dow Jones Industrial Average and the S&P 500 closing at record levels. Yet Nvidia's shares saw a slight decline, and the US dollar weakened, a dynamic that reveals a mix of optimism and caution among investors. But here's where it gets controversial. Despite Nvidia reporting revenue exceeding expectations, shares dipped due to lingering worries about its operations in China, highlighting the complex interplay between geopolitical tensions and market performance. The focus shifted notably towards expectations of the Federal Reserve potentially easing monetary policies soon, which played a significant role in the dollar's recent drop against the euro and the Japanese yen. This movement reflects investor anticipation that interest rate cuts could be on the horizon, boosting risk assets but weakening the currency. Nvidia, a leader in designing artificial intelligence AI chips, posted an impressive 56% jump in its quarterly revenue, a figure that affirms the robust demand driven by AI technologies. However, the company's shares still ended the day down by 0.8%. This contradiction stems largely from uncertainties tied to the ongoing U.S.-China trade tensions, which cast a shadow over even strong financial results. Yet, experts like Peter Tooze, president of Chase Investment Counsel, stress that Nvidia's report contained no signs of a significant slowdown, easing some of the major concerns investors had earlier. Adding to this, Nvidia CEO Jensen Huang dispelled fears that the AI chip spending boom is close to ending, instead predicting that opportunities will only grow over the next 5 years, a bold statement that contrasts with the cautious market reaction. This is the part most people miss. Strong earnings alone don't always translate into stock gains when geopolitical risks weigh heavily in the background. Meanwhile, other tech giants involved in AI, including Alphabet and Broadcom, enjoyed healthy gains of 2% and 2.8% respectively, contributing to a broader rise in the Nasdaq composite. The S&P 500 also notched its second consecutive record close, signaling overall investor confidence in the tech sector's growth trajectory. The positive sentiment wasn't limited to tech stocks. Economic data released recently showed the U.S. economy growing faster than initially estimated in the second quarter, largely fueled by increased business investments in intellectual property such as AI developments. This economic strength further buoyed stocks, with the Dow advancing by 71.67 points, 0.16%. The S&P 500 rising by 20.46 points, 0.32%, and the Nasdaq composite climbing 115.02 points, 0.53%. Globally, MSCI's broad gauge of world stocks increased by 0.35%, despite some European unease fueled by France's controversial fiscal plans. Prime Minister François Bayrou is preparing to risk his government's future by seeking parliamentary confidence for a deeply unpopular debt reduction strategy in September. This political gamble keeps European markets on edge, demonstrated by a slight 0.2% fall in the Pan-European Stock 600 index. On the currency front, the euro strengthened by 0.35% to $1.1678, while the dollar weakened against the yen by 0.28% to 146.97 yen. Traders are eager to see how the Federal Reserve will act regarding interest rates at their upcoming meeting on September 16th and 17th, following comments from New York Fed President John Williams. Williams suggested that while rate cuts could be forthcoming, policymakers want to assess more economic data before deciding, underscoring the uncertainty currently clouding monetary policy decisions. Currently, market odds strongly favor a rate cut in September, with about an 84% probability according to CME's FedWatch. Investors anticipate cumulative cuts totaling 138 basis points by the end of 2026, reflecting widespread expectations of a more accommodative Fed stance to support economic growth. Adding another layer of complexity is the ongoing legal saga involving Federal Reserve Governor Lisa Cook. She has filed a lawsuit to prevent former President Donald Trump from removing her, a case that could challenge the long-standing principle of the Fed's independence. This legal battle captures attention, not just for its immediate implications, but also for the potential to reshape federal governance norms, a hot topic for debate among market watchers and policymakers alike. Treasury yields showed mixed movements as some investors booked profits after a recent rally, particularly in two-year notes sensitive to interest rate changes. The two-year yield ticked up slightly to 3.639%, recovering from its recent low of 3.611%, while the benchmark 10-year note yield dipped to 4.211%, near its lowest point since early August. According to Patrick Garvey, regional head of research for the Americas at ING, the main influence on bond markets currently is the Federal Reserve's stance on interest rates. Bond markets thrive on the prospect of rate cuts, he explained, emphasizing how monetary policy expectations remain central to asset price movements. In commodity markets, oil prices edged higher, with Brent crude settling at $68.62 per barrel, and U.S. West Texas Intermediate crude closing at $64.60 per barrel. Gold also rallied, reaching a 5-week peak of $3,416.14 per ounce, its strongest since late July, driven partly by the weaker dollar and concerns over the Fed's independence. This complex market environment, marked by record highs, geopolitical uncertainties, monetary policy debates, legal battles, and shifting currency dynamics, raises compelling questions. Will the Federal Reserve deliver the anticipated rate cuts? And how will this reshape investor confidence? Can Nvidia and other tech giants continue their AI-driven growth in the face of trade tensions? And what might the legal challenges to Fed independence mean for the future of U.S. economic policy? We invite you to share your thoughts. Do you agree that markets are adequately pricing in these risks? Or is there more volatility ahead? Your perspective matters. Let's discuss.